Hi everyone, Rachel Thompson here, the Smarter Mortgage Lady, doing my monthly summary. So there's a few things that I'd like to outline that we've talked about over the past month. One of them is pre-approvals. So what I've found over the past month with some of our clients is they've gone shopping for a house, they've signed up on a property, or they've become really invested in a property and they love it and it's going to auction. And then next thing, they haven't got a pre-approval and it's a real rush for them as well as for me to help them to be able to get themselves in a position where they're ready to be able to bid at auction or make that first offer with the opportunity to buy. And at the moment, if properties aren't being sold by auction, then potentially they are going to multi-offer. And it's then really key that you have yourself in a position ready to go so that you can have the minimal conditions and offer your best price and have the best opportunity or the chance to be able to buy that property. Next is unconsented works. I've been dealing with a number of clients this month who have again signed up on a property conditionally or been really interested in one going to auction, and it's been incredibly difficult to get lending approval or insurance with under standard terms and conditions to replace that property because of unconsented works. And what I'm finding with clients is that they don't necessarily understand once they're fully invested in that property that if an insurance company won't insure the property under standard terms and conditions, then it's very likely that a lender won't give you a mortgage to be able to buy the property, and that makes people who are really keen on a property incredibly disappointed. So I don't want that for you, but it turns out there's a number of properties around where there's been a bit of Kiwi know-how, can do, and the work's been done since those people have had the property but without the particular consent. So it's really key for you to do your due diligence on a property and have the time frame to do that. Next is lenders' policies due to the pandemic and lockdowns. So lenders are being a little more risk adverse by ensuring that clients have a higher surplus in their budget and that they're making declarations about their income, maybe their business forecasting, or potential change that's happening in a person's employment. So if you know about potential redundancies or change that's going on, then it's key that you disclose that. And have you been on a wage subsidy? Have you been on reduced income? So those things are an important aspect to a lending application, and full disclosure is important to me so that I can actually help you to the best of my ability with a lender, get you the result that you want. And there's been a few articles we've shared this month, but it's something I know, it's the key and the philosophy to what I do is saving you time and money. So working with an advisor can save you time and money. We can shop around the majority of lenders out there. We have access to main banks, to non-bank lenders who might have an appetite for something that the banks don't. But saving you time and money so that you can actually get on with earning an income to pay for it. So we love getting people into their own place to call home or their next place to call home or buying that investment property. So let us help you. Let us do the shopping around. Let us do the pricing comparisons. That's where our value add is. And there's so much more to come once you actually buy a property as well. It isn't always about the interest rates and the cash that you might get. Short-term debts. This has been a bit of a bugbear of mine for a long time, but currently people who are renting tend to rack up a little bit more short-term debt than people who own homes. Vehicle finance, personal loans, credit cards, and student loans. They all have an effect on the servicing of extra debt, such as a mortgage, and the way that a lender will look at your lending application. We can help with trying to consolidate those debts. What I recommend is reviewing what you've got and whether you can look at paying it down or reducing it, because you need a higher income to be able to pay for that short-term debt as well as a mortgage. And another thing is use of KiwiSaver or qualifying superannuation funds. So first home buyers, a lot of people out there like you are using their KiwiSaver to buy a home, and it might equate to around 10% of the purchase price. Ideally you would have 20%, but a lot of people don't. So I talk about this a lot. I've written blogs about it. The first port of call is to go to your provider for KiwiSaver and see whether you can, whether you should, and how much you can withdraw. And then next, go and talk to an advisor. Come and talk to us at ILG. Talk to me, the Smarter Mortgage Lady, about how to get the best lending solution for you to be able to buy a home when you may only have 10% deposit. But I'd also love to talk to you if you have 20%, because there isn't many people out there doing that at the moment. So the monthly summary: get advice, save time and money. We love getting people into their own place to call home. And again, whether that's your first home, your next home, or an investment property, we're here to have a chat. We'd love to help. And we also wrap our arms around our clients by offering a full fire and general insurance service. So looking at that house replacement insurance, your vehicles and your contents, and then also your personal insurances such as life and income protection or trauma. So that's my monthly summary for September from the Smarter Mortgage Lady. Give us a call, send me an email. I'd love to have a chat. Talk soon.